You can go ahead and acknowledge that on the screen, let you know that I do have the recording. I didn't forget, which is great. Welcome, Marshall, Mike, Henny, Brad, Lev. Shared what's going on. Awesome. Another week. First week of the quarter. Rob, good morning. Awesome. Okay, everyone. So let me go ahead and get started and going through the calendar. So right now we're going on April. Today's April 3rd. Tomorrow will be Monday, April 4th. And we have 4 weeks, a full month of April. So what's going on here, right? So let's really take assessments of what's really going on from an overview perspective as for the market. So if you could think about it, right, we're at April 3rd. We just ended the first quarter and we're now going into the second quarter of the year, starting with April. We're now in one complete year, I would say 2 years now since the pandemic of 2020, when that announcement happened with COVID. We still got a little bit of a situation with COVID. Travel is still kind of iffy for some. The restrictions are some of them is being relaxed in some states, in other words, and in some states are not, some countries and some countries are not. But the real situation of 2022 so far is the Russian and Ukraine situation, which is basically another Brexit, right? And if you think about it, every year there's something, right? There's something politically, something geopolitically, or something financially in the market, right? Dollar is through the roof. S&P is 500 is all-time high. Gold has extreme all-time high. We got yen crosses with the yen index just like through the roof, strength as hell. We're seeing extreme numbers, extreme historical numbers on all yen. And it's hitting monthly and yearly historical records since 2015, 2016. So we have to think about all of this, including the fact that the United States dollar, even though it's in a safe haven currency or is considered a safe haven currency among the other currency, United States is in an inflation, right? We're at 7.2, 7.9 the last time I checked, and we went up from 2.9 or 3% or something like that, and we're now at historical level of inflation. And the feds are talking about increasing rates basically for the remainder of the year to kind of help curb down the inflation. And then also we have oil commodity and across all commodities that is experiencing record high level as well. So gas prices are still high and it's starting to come down. So there's a lot of things that's starting to happen. We are going to really see that this month in the second quarter of the year of what's really going on with the market and what is going to be setting itself up for the next 3 months, or April, May, and June before we get into the third quarter, right? So second quarter is really a hot time of the year because the second quarter, April, May, June, is when you should see your best trading opportunity, because this is when before we get into the summer months. When we get into the summer months, volume starts to drop off a little bit, volatility drops off a little bit, and this because central banks, market makers, this is where they take a lot of their vacation times during the summertime. Kids are out of school, children, there's more family time. So right now, the second quarter is where we will get our best opportunity to make the most money as we can. Not to say that we won't catch a lot of money, not to say that we won't catch a lot of pips or we won't get a lot of opportunities during the third quarter, even the fourth quarter. But second quarter, by far, to me, is my favorite time of the year. So it's important that we really understand where we're at, from a fundamental standpoint, from a sentimental standpoint, so that we can make sure we're looking for that technically. Okay, so let's start with the fundamental news for this week. Nothing happening on Sunday, as you can see, and I'm going to point out some things here from a fundamental standpoint. So Monday we have Bank of England, Government Bailey speech. Nothing really, unless he says something regarding the Russia-Ukraine situation, but I don't expect to hear or see anything from Monday. It's going to be basically normal market range conditions. If you're familiar with ADR, average daily range of pairs, you can kind of expect normal conditions unless something politically happens. Okay, so anytime when I said nothing normally should happen other than your normal market ranges and movement, that means everything technically is sound and the plan should stay the same. Okay, you shouldn't expect to see anything erratic or irrational. Tuesday, this is going to be big. Okay, so on your note, you should be looking for Tuesday, specifically with this news right here. Okay, so around 12:30, and you can expect I will be up 12:30 a.m. right, Eastern time. There's going to be some news with Australian dollar. And I think it's important to note that when we look at the Australian dollar today, despite what they do here, and what I mean by here is despite that they may keep interest rate the same, or they may raise interest rate. Let me see if I can have an insight of what I believe could happen. So when it comes to Australian, okay, so my sources tell me that the probability of the cut rate on, let me share with you guys here what I'm looking at. Okay, so we're specifically looking at the Australian dollar, okay? Because what we have here is the next meeting of the interest rate, what's the current interest rate, and the most important thing is what's the next expected move, what's the change by, and basically what's the probability of that happening, okay? Now, when it comes to the next bank rate, now, keep in mind, fundamentally, central banks, anytime you have a central bank news or interest rate announcement, bank rate announcement, that's when the market moves and it creates a lot of reaction to that currency. This is where you're going to see your biggest pullback or correction, or at most case is your reversal, okay? And that could happen, and it depends on where it's at technically at a level. So if it's peak, you can expect a correction or reversal to go down. If it's buried, you can expect a correction or a reversal going up. Now, that also means whereas that technically could continue to go down if there's a significant order block, if there's significant imbalances that it needs to tag or mitigate, okay? So we'll take a look at that technically. But fundamentally, what I want to do is point out the situation with what we expect of the next bank rate. Okay, so we have one, let me see here. Mark this on your sheet. So in the month of April, we got 1, we have 2, 3, 4, 5. You guys see that? So we have the Bank of Australia, which is happening on Tuesday. And then the following week, which is on Wednesday, we're going to have 2. We're going to have the Bank of Canada and the Bank of New Zealand. So this is important to note that next week, we have to be aware of these 2 currencies, the Bank of Canada and the Bank of New Zealand, to expect to announce their interest rate. And that will have a significant differences on that particular 2 currencies next week, which is the Bank of Canada and the Bank of New Zealand. And then on Thursday, we also have a 3rd currency. So next week, it'll be Canada, New Zealand, and Euro. That would be huge for next week. So what does that mean for us to trade this week when it comes to Euro, Bank of Canada, and New Zealand? That means we got to stay the course, but coming next week, we may want to be a little bit conservative in the number of entries or the trades that we take. In other words, we don't want to take a low probability test trade when it comes to the end of the week. We want to kind of take and look for high probability A trade setup and making sure that we're looking at key levels, order blocks, imbalances, mitigations, and liquidity. I know it's a lot to say. Unless you understand those terms, unless you understand as one of our VIP coaching students, you probably have no clue what that means, okay? But just rest assured that as a coaching student, we look at all of those things to consider what we expect the currency to possibly do. Again, possibly, because we don't have a damn clue what the hell the currency is going to do. We don't know what the central banks and the market makers are going to do. We can only look at it technically and come up with a probabilistic conclusion based on when we expect the market makers to make a significant move in a currency during a high fundamental news, right? So basically, the market makers or the central banks or the market makers per se and all the hedge funds company will make a significant move in a currency, in a trade, whether it's to liquidate, liquidity grab, or make a significant push, impulse move, or reversal. And they would do it when it is the most, I would say, unobvious, right? It won't be as obvious. If they do it right now and you're thinking, oh, of course, it makes sense. They're at an order block or they're at a demand or they're at a supply. Of course, it makes sense and you can expect it and you can basically trade it with a very good high probability. But when you do it during news, it's kind of a covert situation because you don't know if it was news that moved it, was it expected to move that way, or the news said it was positive, but the pairs went to a negative situation, or vice versa. It was positive news and it was negative news and it actually went into a positive situation, right? So you have all of this manipulative news and contradiction that makes it very difficult for you as a trader to be highly successful or accurate by putting one trade and then putting that 1 to 2% of that trade and hoping with the stop loss or tight stop loss that you're most likely going to get that trade. I hope that makes sense, okay? Because it's important that as a trader, it's like you do not have enough technically, enough to worry about emotionally, psychologically, with all these terms, and you got all the pairs that you're trying to focus on. And if you focus on more than 10 pairs and you got live money on the line, it's like you do not already have enough to worry about, to try to even worry about what's going on in the market and who's trying to manipulate you so that you don't click on the wrong button. It's easy to get on the chart and then think, I'm going to click on sell, and you actually push the right button instead of a left button, all because you were nervous or unsure or uncertain or emotionally just freaking, all in a mess, right? You're just so distracted. So if you do not think trading can be difficult, it can, if you don't feel confident, if you're not sure, if you don't have a really strong principle of psychological and emotional control. And if you notice, I keep saying psychological and emotional control, psychological and emotional control. And I probably say that 100% more times or 1,000 times more than I would say, make sure you get your entry rate, make sure you check with all of the confluence, and making sure you have everything perfect before you push the button. Because emotional and psychological control weighs more heavily than anything else, because the market is going to do what the market is going to do, okay? So coming back to this particular situation, we have the Reserve Bank of Australia. I just want to focus on that for this week because there's a lot to think about. So with that, we have the current rate is at 0.10. And then we expect on the 5th, there's going to be a rate cut, and look like they are going to cut it by 10 basis points, 42%, right? And there is some fundamental reason why that they're expecting to do that. Now, that could be a number of reasons due to, let's see here, Federal Reserve, I'm looking for some, I'll find some additional information in terms of why is it expected, or why is it announced that the Bank of Australia, the Reserve Bank of Australia, which is Australia's central bank, there's a fundamental reason why this company or this bank is expected to make that change, okay? Let's see here. Okay, so the Reserve Central Bank now beginning to taper. Okay, they're now beginning to taper the quarter end. The next move from the central bank is likely to be in the form of a hike. However, significant risk remains in policy tightens is unlikely to occur within the immediate future. Okay, so that is what my sources are telling me, that the next move for central bank to increase the rate is unlikely due to the policy tightening in the next immediate future, okay? So when we have this negative news and central bank, so anything from a logical standpoint, from a simplistic standpoint of understanding, anytime there is an increase like here, you should expect to see positive news for the currency. So anything interest rate increase is good for the currency, and anything reduced for the currency or interest rate cut is bad for the currency, because investors are not happy about that, and therefore there'll be less demand for that particular currency, okay? So if the interest rate is low, obviously, if you were a huge investor and you were diversified across multiple currencies, you would not want to put your currency in Australian dollar. You would move your currency into another currency, or you would want to put some of your diversified portfolio or asset in a different currency, a country's currency that's giving you more interest rate, okay? So logically, that's what it will seem like. On the market, when we get on the chart, you don't know what the hell is going to happen. But with an interest rate cut and with the possibility of the currency being weak, we can currently only assume what we expect to happen Tuesday on April 4th, okay? And with that being said, we're gonna just have to wait and play it as we see it on the chart, okay? Even though we think it could happen, it could most likely happen. We'll be prepared either way. You gotta have a plan on how you're trading Australian pairs, which is Australian USD, Australian JPY, Euro odd, pound odd, and if you're trading odd chef or odd NCD, hopefully you're not, or odd CAD, which are the 2 or 3 lower range, which is like 30, 50, 60 pip range. I don't trade those pairs often because they're slow, but when you get historical moves like this is when you find your best opportunities in those pairs, okay? Now, if any of that does not make sense, watch the recording again, because it's very important on what I just said when it comes to fundamental news and understanding the differences between central bank news and the fundamental versus other fundamental information, and why that makes such a big difference when we get ready to trade the currency in the particular week, okay? So next week though, it's gonna be very, very heavy. We got New Zealand, Canada, and then we got central bank for Euro. That is going to be huge, 1, 2, 3. So it is going to be a very, very, very volatile and very opportunistic, I hope I said it right, month for the month of April, okay? So that means there's gonna be a lot of opportunities for us to make some big pip, because we got basically 4 major currency news and from the central bank that's gonna happen this week. Now, the big one for me is this one for next week, JPY. That is going to be huge. And we expect a hike, right? But if you think about it, yeah, you expect a hike and you expect this currency to go up, right? And you expect this currency to be strong, right? So that is what we're going to be expecting, but we never know. The good thing is, if this does transpire and we do have this currency pick up strength, we are going to see some very nice payday across all currency pairs that we are short on JPY pairs, for the simple fact that JPY pairs are all on the quarter side of the currency. If JPY pick up strength, as we are hoping next week that happen, we can expect some significant downdraft on these JPY pairs, keeping everything constant in terms of geopolitical situations and so forth, okay? And if that happens, we can expect this month to see some really good significant move. And I would say this would be even leading up to April 28th, because right now, April 28th, we're talking like 3 weeks out. So it could rain for the next 3 weeks, or it can basically start to fall in the next 3 weeks. Either way, we're gonna trade JPY pairs like crazy this month, because we're already in a lot of those pairs, okay? Okay, going back to our, so Australia for Tuesday, and then doing, that'll be basically all of London session, New York session, basically for that whole week. You can expect some significant move on Australia. We have the ISM PMI, which is the Institution of Supply Management PMI. Numbers has been bad, supply chain perspective. So we can expect to see some volatility on 8:30, 9:30 on the news for Tuesday. On Wednesday, it would be CAD and USD. You got the FOMC minutes on what they expect the currency is doing, what they are going to do. So that's going to have some volatility. Basically, whatever happens on 8:30, I would be looking and staying on the charts to 2 p.m. just look for volatility as well on Wednesday for the dollar, okay? So that'll be on Wednesday. On Thursday, we have just unemployment claims, FOMC minute. Bullard speaks, one of the board members, he'll speak, he'll say something, nothing significant. But Thursday, you can expect normal range moves. It could be some high volatility moves of continuation from Thursday. So if there is good news for the currency and it's already going up, then you can expect after market opening on Thursday that we can see some continuation of that move upwards or downwards. And then Friday, we got the employment rate change. As you noticed, last week non-farm payroll was just U.S. This Friday will be Canadian. So sometimes normally you have the employment rate for Canada and US happen at the same time, but it all depends on calendars. And US non-farm payroll just happened to have last week on April 1st, which is considered, the United States has considered that to be the first Friday of the month, when Canada's elected to have their report come out on the 8th, which is for they're considered Canadians unemployment non-farm payroll kind of a report. It does the same thing and has the same impact. So expect some heavy volatility for Canada pairs. Okay. All right. With that being said, let's take it to the charts. Okay, I had to take some notes out of the way. As you can see, right, so I got TradingView open along with the Sonar indicator here, which is the smart money concept one, which marks a lot of structures and so forth. It's important for how we trade. And of course, I have stochastics, and then I have this other indicator here, which is the Sonar oscillator, which is kind of like an RSI version or a stochastic version, but I have both of them on. This one gives you a little bit of more of a divergence, which is pretty good. But if you understand divergence, you can paint that on your own. Okay, so I'm looking at the dollar. We're going to start with the dollar index. And if you notice on the dollar, historically, like this was this high back in February 02. And this is on a monthly, and it's important to understand when we're looking at the monthly, because we want to know what is basically the ceiling of the currency, right here, and then what's the floor of the currency, as we're basically in the middle, so that we can determine our trading range. Okay, so this is going to be our trading range, and what we're going to be focusing on between the high of this and the low of this currency range right here. So a lot can happen within a few months. So this, for the next 3 months, this is what we're going to be focusing on. I hope that makes sense for the next 3 months. Okay, this is not a daily, this is not a 15-minute candle, this is a monthly. So let's zoom in a little bit and tell you exactly what I mean. Okay, so in this currency pair, in this index for the dollar, right? As we look at the dollar, and we can see right here, this was the best time to go long. And this was back in June of 2021. So good, about 8 months ago, this index, the dollar index, took it from the bottom of this order block, right, to the top of this order block, with stochastics being hike and peak, and this order block now being basically mitigated with the imbalance that was already triggered and basically mitigated. This is what I'm talking about right here. So this this area right here of mitigation of imbalances was mitigated and more, okay? So with that being said, let's come up with our directional bias, right? So we always look at the higher time frame, the monthly and the weekly, to give us our overall directional bias. So with this being said, and knowing that this has finally been mitigated, guess what our overall directional bias for the dollar is? Anybody want to take a guess? Or bearish? I would agree with that. Because this right here is not the time to buy, right? This is not the time to say, hey, now we get into a buy. No, this was the area where you would want to buy. Why is that? Why would you want to buy down here? Supply or demand? Demand, that's right. And this is an area of supply, right? So we have change of character. It created a double bottom from a retail perspective, change of character, broke market structure on a monthly standpoint, and basically mitigated the supply, right? And became demand. And now it's in supply area. This is where we should be looking to short the dollar. And that's all I'm thinking of right this moment, right? Now, that doesn't mean that the dollar will be bullish at time. From a monthly standpoint, it would. But if you stay short and you stick to the bearish sentiment of our overall directional bias, you will be doing the right things every time the dollar pops or every time the dollar shows a bullish move. You should be doing the same thing, which is what? Looking for sell, okay? All right, let's go to the lower time frames. Let's go to the weekly. And look like you got a lot of bullish, you know, order blocks here, but it's not showing you any bearish order block. And we are going to do it right here. So this is the break of structure, and this is the last candle responsible for this impulse move drop and this break of structure here. So this was the lower low, lower high, came back, created this lower low, pushed up 2 or 3 candles up, and then broke structure and then made our move down, right? And it created this little small imbalance over here. So this would validate an order block. So this would be our point of interest on a weekly. And as you can see, we have 1, 2, came 3, 1, came down 2, 3. We got 3 or 4 touches here that's telling us with the weekly, we now have a weekly bearish candle here that's telling us that this is a very strong area of resistance as well. So this is our supply, and we are looking to drop the dollar, okay? We're looking to weakening the dollar all the way through, and we're hoping to come back here. Who knows what will happen after the dollar drops? If you can think about it, going back to the monthly, you know, the dollar can drop all the way here, pull back, and maybe continue downwards. You know, who knows what will happen? It could very well range as well. As you can notice what it has done, right? It came up here, came down, came up, came down, came up, right? You can see what it's doing, and this could happen. It could happen for another 6 more months to where we may see a continual range of this dollar. That's what it's been doing here. Came down, came up. If you would have bought it down here and went up, you would have made a lot of money across all the dollar pairs. And if you would have shorted it down here, you would have made a lot of money by shorting the dollar across our dollar pair. And if you would have bought it down here, you would have made a lot of money by longing the strength of the dollar, right? And now we're up here. Could it go up? Well, the likelihood of the currency moving up fundamentally, we just talked about it, is very, very highly unlikely given the situation that we have interest rate, that we have inflation, we're through the roof with prices, and we got all of the stimulus money that was put in there. And we got this also this other news that Putin said that he'll no longer accept the dollar for their commodities, and it will be backed by gold or the rubies or something like that. I can't remember what he exact said. I can't recall off the top of my head, but just not going to rely on the dollar. So all of this news is just pointing to the ruble. Yep, just pointing to the fact that it's just more weakening the dollar, right? Now, the what we don't know is, here's what we do know, that we're looking for expected weakness in the dollar. What we don't know is how far, how low. Are we looking for a market crash? Could it come down here and come down here? It could. But what we do know is that we're expecting the dollar to come back down here to this level, at least, especially to mitigate these imbalances here that you see that's in yellow, right? We got this imbalance here. That's got to be mitigated. So we got this area right here that has to be mitigated. And go ahead and put this template here. And then we got one here. And we got one here. So these are all imbalances that would eventually need to be, mitigated. So when we're looking for any type of mitigation, so this right here, this spike had mitigated any order block situation that was up here. We're now in this area. Could the dollar go up a little bit more? Absolutely. Sure, it could. Anytime. Anything is possible, right? What I'm saying is that could the dollar come up here or even a little higher before it starts to drop? Yeah, that's possible, right? And if it does, then we'll just continue to, start looking for opportunity to short the dollar. However, everything technically from a monthly standpoint and from a weekly standpoint, it's saying that we have more of an opportunity that the dollar is going to come down. Now, what I do expect to look like on a weekly is I do expect to come down to create some type of structure here of change of character. What I mean is it'll come down and then it'll create an imbalance here to come back up, maybe retest or come in here in this area of this order block, move here, and then come down, right, and break structure. Oops. Draw that one more time. So I expect to see something come down, maybe around this area of support, come back up, and then come back down and break structure. So what I'm looking for is just structure right here. Once we have that, then that'll be a significant signal from a weekly standpoint that this is confirmed to go down. Now, obviously, this is what I would look like on a weekly, but I would want to see that on a lower time frame, of course, but on a higher time frame, this is what I'm talking about. Just from a change of character standpoint, that when you see the dollar drop, it's going to mitigate, come back up, right? And it's going to mitigate the supply here. It'll come back, create a demand, mitigate the supply, and then break this structure. And I would want to see that on a weekly, on a daily, and a 4-hour to really confirm that this is definitely in a downturn. And this is on a weekly. So we're going to look at the lower time frame. This is what we're going to be looking for in a lower time frame. So let's go to the daily. So it looks like we're almost there. And here's what I mean by almost there. Right now, you can see from this point to this point that price has not broken, right? It's not broken. And it looked like it's more of a support. Would you agree? And what this is basically it's liquidity. That's basically what we're seeing here. Let me see here. So this is liquidity. And in the laws of smart money, right, institutional stock money, this is liquidity, which is also the break of structure. Anytime you have more touches. Now, retail traders are looking at, and they're calling that what? Support, right? So they are going to trade off of that, right? So they're going to trade off of this, and they're going to, like right now, they're looking at this and going, okay, this is more of a what? 1, 2, 3. What do you call that? From a retail pattern. Retail market pattern, what do you call that? You got one touch on the support, one touch of support, one touch of support, right? What are they calling that in a market patterns? Right, triple bottom, exactly. So triple bottom patterns tells them they should be buying, right? And they are temporarily correct, right? Because it worked here, they get out. It worked here, they get out. And they're making a little money here. They're making a little money here. When you're trading that, that makes sense. So when they're looking at this, they're doing the same thing, or they're trading off the break line, right? Trying to get this moving up and trying to trade going up. We see that as liquidity just as much as we see this as liquidity as well. That's liquidity. Now, this liquidity right here is off of this resistance level where we're seeing prices come down on the daily, come up, touch that, and come down and touch this. Now, anytime we have liquidity up here and liquidity down here, there is liquidity grab happening. A liquidity grab that's happening here, coming back and taking the other way, liquidity grab down here, taking it the other way, down here, tapping down there. From a market structure standpoint, we're basically in a what? In a range, right? And in the range, there's going to be an expansion, right? And anytime there's an expansion up or an expansion down, what happens? Well, we can expect that it's going to be mitigated to come back and catch this order block, right? And then go back up, or come back up if it was going down, touch an order block that would be creating, because it created the the expansion or the impulse move to come back down and mitigate this, or come back and mitigate that. That's what we can expect to happen out of this break, okay? Now, given the fact that is that an upper order block from a supply standpoint versus from a demand standpoint, we are expecting the break to happen in a bearish standpoint. So in other words, we're going to expect the breakout to happen here. Now it can come here, it can come here, but most likely it could come here for sure. This is the next order block from a daily standpoint. After it does that, I'm expecting to buy it. Yes, I'm overall bearish on a monthly standpoint, but after it comes down and it comes this far, I will buy the dollar, right? I will buy the dollar, and I would like to see the dollar come up here and then come back down, okay? It can come here, or the dollar can also come as far as here and then come back up and mitigate before it comes down, okay? This is what I'm looking at from a dollar standpoint. So I expect the dollar to be weak. Now, if you're thinking this from a base currency standpoint, we have to understand what that means. So when the USD dollar is on the base currency, the quote currency side, sorry, on the quote currency instead of the base currency, we can expect the dollar to be, or those crosses to shoot up, okay? When the USD is on the base size, we can expect the currency to go down, okay? Shoot up. So this is for like EU, Euro USD, Pound U, AU, NU. And then for here, we can expect UCAD and USHEF, US West French, okay? Expect to go down, okay? So this is what we're expecting. If we're expecting the dollar to go down, we're expecting to trade up these particular currency, AU, NU. Now, NU and AU could temporarily go down before it goes up, and we'll take a look technically. But from the most part, the most correlated close pair to the dollar will be the EU, and GU would be the most closely correlated to the dollar. We do expect to see some movements to the upside on AU and NU, but not until we see maybe some bullish move once we take a look on the currency from NU and AU. But GU and NU will basically correlate highly with DXY or the dollar. DXY is the dollar index, okay? That is what we're expecting from a dollar standpoint. I expect a weakness on the dollar coming back down to mitigate this area right here, which is this order block, and this imbalances also to come down and mitigate that imbalances, come back up, because we are going to liquidate the supply, right? So this would be supply liquidity. And then when it comes back up, and it's going to, because it's going to break structure, right? So this is going to be a break of structure, BOS, right here. It's going to break structure, what we're looking for, target one of these order blocks, right? It most likely could be this order block, since this order block looks like it's already been mitigated, and there's imbalances here. So we know for sure, most likely target number one is going to be there, right? And then I'll be looking to buy, because there's going to be some imbalances created because of this, come back up, and it's going to create a break of structure here as well, right? It's going to create a structure. So, and then when it comes back up, it's going to come down. So from a market structure standpoint, we got a high, a swing low, a swing high, swing low, and there we go, right? So we got a high, we got a lower high, a lower low, a lower high, a lower low, and then of course expect to see this, a lower high, and so forth, right? So that is what we're going to expect to see all the way down for the next 3 to 6 months, okay? So that when we look at the weekly, we can expect to see this for the next 3 to 6 months. That's what I'm looking for. I'm expecting $1 a week, expected to come up and mitigate and liquidate and mitigate this liquidity areas, the supply liquidity to balance that, and then come back and then take care of the rest and come all the way down here and see if the dollar is going to continue to be weakened all the way down to this particular order block here. When I go to the monthly, we're talking about this order block in this area right here. And I'm gonna go to the weekly, this area right here. That'll be the point of interest of where I like to see the dollar come down, because this is about to be a crash. Now, mind you, when this crash and the dollar gets this weak and interest rate is through the roof, interest rates is through the roof, inflation is starting to come down, prices are starting to come down, and obviously job expansion will probably slow up. Companies will start to slowly invest, right? And therefore we'll be going into more of a recession, okay? The dollar breaks this, we're going to be more into recession. If you think about it, that means real estate market will start to not sizzle as much in some of the hot markets outside of Miami, you know, Tampa, Orlando, New York, Denver, Austin, Dallas, Los Angeles, San Francisco, those hot markets. They will probably start to see a slow impact versus the rest of the market will probably start to see some significant impact in regards to real estate market. Real estate prices start to slow up and it becomes more of a buyer's market versus a seller's market as it currently is right now, with real estate market going through the roof, okay? So we gotta think about that overall in the market, because we're gonna make money whether the market is going up or whether the market is going down. We have to be ready for that, because the dollar is peaked and we got all these economic and fundamental conditions that's going on that's showing us that, listen, the dollar has reached its extreme level. It hasn't been this high since March 2020, which was pre-COVID situation 2 years ago. The year before that, when it was up, was back in 2002, right? And the dollar hasn't broken this level since 2002. Back in, we're talking, let me see, I'm sorry, this is 2017, 16. So we got 2020, we got 2016, and prices hasn't been higher than this since 2002. Damn near 20 years ago when the dollar has been that high. Okay. Any questions on that so far? Is it making sense? Are you guys marking your charts? Are you guys marking your calendar, marking your notes? Okay. All right, so let's go into the gold. Okay, so with the dollar expecting to be weak, knowing that we're in historical level with gold, or we hit trigger all-time high of 2080, 2079 on gold. With the dollar expecting to be weak, what can we expect most likely for gold? Look like we're gonna get ready to go into some historical level. Yep. So right now, we got gold, and go down to, this is the weekly. right? Yep. So right now we got gold playing weak right here. We have a support level that it could come down to mitigate, but I can tell you that I don't expect the gold to come down any lower than probably here. I doubt if it come here, but I could see it come down, maybe about right there and come back up. Let's take a look on a daily. This is what I'm talking about from a daily standpoint. Right now, we got liquidity sitting right here, breakup structure, right? And this is liquidity, or also known as probably retail support, right? So here's what I'm expecting gold to probably do. That's extreme, isn't it? If dollar takes a dump within the next 2 weeks, we can expect gold to either range for the next few days, but I am definitely bullish on gold. Now, that doesn't mean that gold could not come down and mitigate possibly some of these areas or even down this area. Okay, that's not to say it could not. However, I doubt it. But if it does, either way, this is the most important thing. Swing high, swing low. Gold has been ranging here already. It already came down and basically mitigated this order block here that was kind of basically responsible for this impulse move up. So all of this is mitigated. Now there's a little bit of mitigation here with an imbalance. If you look at it from a daily standpoint, there's a couple of small, could gold come here, here, and here. All of this is in the discount area. So either way, we're in good areas to be going long, okay? So if gold drops a little bit more, anywhere in this area, I gotta tell you guys, I would be looking to going long gold already. If you haven't already, when the market opens, if the market drops a little bit, I'm bullish on gold. So you guys already know what bullish, if I say I'm bullish or if I say I'm bearish, coaching students, you guys should already know what that means, okay? That means we are looking to buy, okay? You gotta look for signals. You gotta look on a lower time frame, look on your daily. You got your daily, you got your order blocks here, you got another order block here. You're looking for, so tactics is already starting to get buried on the 4 hours, and you're looking for this liquidity area to be tested, okay? So it can be tested. This is a good area to go long here. And if it breaks that, then take another long here. Either way, I tell you what, if gold breaks this right here, gold is probably maybe a C grade trade, kind of a C grade. It gets here on a 4 hour. And what I mean by here, it means this double bottom here. Look at it on a 4 hour. There's a double bottom, which is also for retail support. You can see this on the Sonar Lab. They have a support here, right? They got a support level right here. And this is the H4 support level, okay? But this is what we call liquidity, right? So we're asking for liquidity to be tested, right? Because the market makers, these are liquidity areas. Now, market makers could come back here and liquidate again, or they can challenge this demand liquidity, come back down, fake out retail traders, come back a little bit more, thinking that they're going to go short and then go long right here. Okay, either way, we know as retail, as institutional trading, that we're in the discount area zone. Okay, we're in the discount buy zone. This is it right here. The equilibrium, this is the 50, right? This is the 50 level right here, right? And if it comes back down here, we're looking at 618. Take that down, sorry. Go the other way. This right here, this liquidity area, this is the 50. So between the purple and green color, that's the 50. That's the equilibrium mark of this move. From the swing low to swing high, that's the equilibrium mark right here. You see where gold has been ranging here. Now, we know it's bullish for the simple fact on a higher time frame, and based on what we expect the dollar to uncorrelate from each other, we do expect the gold to get some strength here, especially when you see some mitigations up here of some imbalances that has to happen. This area has not even been retested area. So this has to be at least be retested as well. And then we do have a couple of small mitigation imbalances, but nothing significant like it does up here. So, and then we have 2 touches of liquidity. Well, they're going to retail traders are calling that support. We're going to call it liquidity. That's what we call it. But at this liquidity level, we have what? The magical 618 level. And then we have a 786 that's right here near this particular small 4-hour order block that can also be mitigated. Okay, here's the thing. We don't know exactly where in this area we expect gold to bounce. But the good thing is we do know the what, right? We know in this area, it is going to go long. We know in this area, we can feel confident that it is going to be bullish for the simple fact that we're looking for the dollar to drop and continue to get weaker. And therefore, people are going to be more invested into gold, and we can expect these areas to be mitigated because it has not been tested yet. So right now, I'm going long. If it gets down here, I'm going even longer again. It goes down here, I'm going to go long again, right? So I'm already long here, small. If it goes here, I'm going to put more, right? And if it goes down here, I'm going to go to mitigate even more, right? Now, I'm okay with going a little bit of a drawdown because I traded small here. I'm going to trade a little bit larger here, and I'm going to put full standard size here. I hope that makes sense. So I'm going to build into my positions, banking it going long. So right here, I'm already out of the money, right? But when I come down here, I'm gonna be ready to take another trade. And I come down here, I'm gonna be ready to take another trade. I'll take a temporary short drawdown, trying to catch the bottom of this move because that's what we do. We catch bottoms, right? We're catching bottoms to sell high, or we'll sell high to exit low, okay? So this is where we're looking at, and this is where I'm banking on, and I'm going long and bullish on gold. Okay, US 500. Well, as you can already see here, I'm already bearish, and I think that's no secret there. So I'm bearish on S&P 500, and go to the 4 hours and the daily. Right, this is what I was hoping that it would do. That I was hoping that it would go up, and there's still a possibility that it could, right? Now, but what happened, it actually came down here. So I'm going to go ahead and release that. So right here, this is where it came down. It came up. I'm looking for a bounce back up, possibly maybe about right here. It could come up and then come back down. Okay. Overall, I'm bearish, right? Right now, it's not the time to sell. Okay. Even though I'm bearish, right now it's not the time to sell. This is not a sell area. Okay. sell was right here. Now, if you did not sell, or you didn't sell here, you didn't sell here, you didn't build in positions like I did, then you're probably thinking, okay, when do I get in, right? Right now, it's starting to come down already. So you're missing the trade already. So what we need to do is go into the lower time frame and take a look when's a good time to get into a trade for this. So I'm bearish, right? This is my target. This is my target. And I would expect to see, S&P 500 come all the way down here, come up, retest this, retest somewhere here to mitigate, and then continue downwards. Oh yeah, if the market is already, this is S&P 500, if the market and the dollar is getting ready to have a crash and it's going to go into the recession, where do we think the S&P 500 is going to go, folks? You think it's going to go up or go down? That's right. There's going to be a lot of hurting 401ks. I hope people understand that, because it's getting ready to be another round for a market recession. Why is that? You guys know from economics from high school, right? You guys understand that. We have expansion, recession, expansion, recession. This is the normal economic cycle. Am I right or am I wrong? Do we have some good high school graduates? I didn't graduate from high school. I'm a high school dropout. Market cycle. There you go. Right? But I did learn this in college. Right? So we understand that, right? And the market has been an all-time high right here, right? All-time high. And we can see right here that since COVID situation, February 20, when the market did a huge correction, and then the S&P 500 dropped, right? Let me go to the monthly. Weekly is probably better look. Okay, so we have this right here on February 20th. We have the pandemic announcement, and the market took a huge correction. And then back in March, when they start to do the stimulus package and the stimulus money, and it start to bounce back, we have been on a market bull run since March 2020, all the way until January 2022. So for 2 years, we've been on a bull run to historical high. Okay, this is historical high. Look what the market did now. We haven't seen this big of a correction since when? Pre-COVID, right? 2020, 2 years ago. We now have a huge correction. Okay. Now, what I'm looking for is a continuation. Look, it came down, it pulled back up. We have a huge order block on the weekly, and now we're looking for this market correction to continue. That's what we're looking for. Now, think about it from a market structure standpoint, okay? We have a high, we have a breaker structure, came up. This is called a change character, right? We have a change of character. Came up, came down, came up, didn't create a new high, and then it broke a structure, right? So this change of direction, or what we call choke, okay? Change of character. This is an institutional pattern. Change of character, also known for change of direction, right? It's right here. Clear evidence of market change of character on the higher time frame on the daily. Change of character again on a bearish change of character is when you have market create a high, and you got this break of continuous structure, CTS, right? CTS, continuous trend structure. And then you have break of structure, anything right here, break of structure. And it comes down. And then it either retests break of structure, like equally or slightly, right? But then it doesn't continue on. It needs to come back up and basically mitigate this order block that created this move. You guys are with me so far? So you have, it's a three-part phase. One, we have a TTS break right here. This would be number one, a CTS break. This break right here, just break up. Number two, we have a mitigated right here. Just we have a when it comes back down, we have a mitigated demand. It comes back down and mitigate this break of structure, not break of structure, but it mitigated here and it come back up. And then it mitigates supply. Or order block. And then the final one is break of structure. So you got a CTS break right here, CTS break. All normal uptrend is a CTS break, so we got this one. We have a right here. I'm gonna show you guys right on the chart. So we have CTS, CTS, right? CTS, 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 CTS. Those are all continuation trends, right? We got a CTS break, check. We have a mitigation of demand right here, check. We have a mitigated supply order block, check. And then we have a break of structure right here. Well, the small break of structure is actually right here. You guys probably can't see that, but it's right there, right in this low. When that low, it came back up, it mitigated this order block here in this area, and it came down and it broke this structure. Anytime it breaks that structure, that's an internal structure. And this change of character confirms that break right there. Break of structure, it comes back down and it breaks that. You now have a change of character. That's a choke. That's called a bearish choke, change of character. Change of character is reversal, right? Now, a lot of people from a retail standpoint will either call that a double top. They may call that a head and shoulder, or they may call it a crown, right? That makes sense? Double bottom, double top, a shoulder, head, a shoulder, or they may call it a crown. Retail standpoint, we look at it as a change of character. Does that make sense, everyone? Hope that makes sense. Let me know if you guys got that. We'll go more into that into the coaching, because there's a lot more than just that. Because there's actually several different types of change of character that retail, that institutional traders we trade, and we looked at for Confluence on a smaller time frame. Okay, so we also look for that. These are advanced strategies. Of course, this is what we talk about in the coaching academy. So if you're ever interested, that's what we go over in institutional trading. So as you guys can see here, this is a very clear change of character, right? We have that on a higher time frame. Very, very huge. Now check this out. When you come down, we got this high market structure. We got a lower low. We have a lower high. Came down, swing, came a lower low. And then it looked like it came near to the same, right? So so basically this right here becomes the lower high instead of that first one, right? So when we first came down, this was a lower high, right? When it came down. And then it came down and it really didn't break it. It came back up. So this right here becomes the lower low, and this right here becomes the lower high, right? So we'll talk about market structure in our training again, coaching students for really understanding market structure. So now we're basically just looking like this. Hope that makes sense. We got a lower low, lower high. So what we're looking for next? So we're looking for a break of structure, a true break of structure, to give us a full definition following order flow. These are order flows, right? So as you can see, when it breaks structure, and these are liquidity, right? This is the liquidity up here. We got liquidity down here that's been mitigated. It came up here. It's liquidating up here. It's now starting to come down. When we get these order flows in confluence and it goes down, lower lows, lower high, what are we looking for? Next is a lower low to give us the definition of a true what? Okay, now this is on a higher time frame. Now let's look at the lower time frame on the 4 hour, and you can see it very, very clearly. So what this look like on a lower time frame is this. Lower low, lower high. That kind of makes sense. Now on a smaller, lower time frame, obviously we're seeing all of this lower low, lower high, lower low, lower high. Then you get a change of character on a lower time frame, right? You got the high, you got the mitigation of the supply. This is called a bullish order or a change of character. Then it came back up to mitigate the demand. And then we have a break of change of character, break of structure here, and confirms that it's going up this way on a lower time frame. Now we're looking at another change of character here. This is going to be looking for to give us a lower, give us a change of character going down to the lower time frame. So let's take a look at that and see if that's been completely formed. Based on a change of character on a lower time frame, we have a higher high, higher low. We have a higher high. And then we got a break of structure right here. So we're looking for what? We're looking for a mitigation of our supply right here. This is mitigation of our demand. It basically broke the continuous trend structure, came up, gave us a higher high, came back up, came back down, mitigating. Right now it's coming back up, it's giving us a little bit of a pullback on a lower time frame for S&P 500. It's mitigating this area right here, which is our demand, to mitigate our supply. And then we're looking for a break of structure. Okay, and this is what I'm looking for. Okay. So I've actually, obviously I was, I think I was short starting right here because I was hoping that it'd come back up this high to come back down. And then it blew past that and it came up to this particular order block. Look how close look how accurate this thing came in. This you probably don't see it right here, but there's a gap right there, which is an imbalance. Let me know if you guys see that. That's an imbalance. Anytime you see a gap, or if you see a solid buy or sell candle, this would be, this is another imbalance. And in indices, you get more imbalances from gaps than you do, or just as much as you do when you have a bullish candles or bearish candle sell-off impulse move that create imbalances. You can get them from gap as well. And you can see where it mitigated right there, right? And it hit this and it created a retail resistance, came back down, it blew past this H1 support, it blew past this H1 support. So retail traders, if they were having sell stop, well, you can guarantee you that they're getting ready to get smoked right now, because we're hoping that this thing will do this, come back up, maybe right here to this area to balance out this move. You guys can see it. Let me know if you guys can see the imbalance. You guys see it? Right there. Yep, right there. So that means we have an order block that was created, right? On a lower time frame. So came back up right there. This is on a 4-hour time frame. So what am I expecting this to do? I'm expecting, or we can expect, price to come back up based on our change of character format, and to come back down. Right. So it's gonna, right now it's gonna mitigate this demand to mitigate the supply, or the order block that was created here, that created impulse, mitigate this imbalance, and then come back down to give us a change of character, right? Yeah, yeah, here, yeah. Remember. One, two, 3, 4. Got change of character break. We got a high, mitigating the demand, mitigate the supply, and there will be an order block right there, and then break of structure. Okay. Once we got that, we got a choke. So on a lower time frame, on a 4-hour, we have not have a choke yet. So this is most likely going to come up to pull back, right, temporarily. And I am going to get ready to do what? Since I'm bearish, we are doing what? We short pops. We look for sells. Look for sell. Okay. Everything we learned is in our coaching plan, but detail by detail, in really big details when we talk about these specifics, techniques, and concepts. Okay. So that's S&P 500. Let's get into. I'm gonna step right over to DAX and US 30. Like I said, they follow S&P 500. Like I said, it's in my coaching plan. The S&P 500 and DAX and US 30 definitely correlates to S&P 500. It's just that they're faster, right? So I do expect a little bit of pullback on DAX, expect a little bit of pullback on US 30, but then overall, we're looking for bearish moves to fall on US 30. It could come up in this area. So if you're in DAX, this is already there. I could see it possibly maybe ranging and then fall back. It could come up a little bit. I doubt it. US 30, based on its market structure, look like it's a lot faster there already. So it could pull back. Right? So I can see this coming, doing this for US 30, pulling back a little bit, doing a change of character on here, and then finally breaking structure. Okay, it'll do something like that for US 30. So right here is the H4 support, come back. It went up to the support, came back. It's going to mitigate this demand, come back up here, take out these imbalances and mitigate the supply real quick while retail traders are getting faked out. It broke all this support level here. So hopefully they're not short because they're getting ready to get smoked. It's not going down here, not anytime soon, not in one shot. It's gonna come back up here and then come back down. US 30, I'll be looking to short it, and along with DAX and along with that S&P 500 this week. Oil. Whew, love oil. Okay, based on the fundamental news of what we're seeing with oil, stating that, you know, both Japan, Canada, and the United States has released some reserves. As you guys know, when they just, oil is a commodity. Aside from all the other pairs, oil commodity is a true essence of economic supply and demand. You guys know what that means. If there's a high supply, we can expect lower prices. If there's a high demand because of scarcity, then we can expect higher prices. Remember that. Commodity, corn, wheat, oil. I don't know if you're selling or trading pigskin, whatever. When it comes to commodity, it is very true essence of scarcity, supply, okay, or supply and demand in true essence of economic conditions. Okay, so we've already seen this be mitigated. We've already seen now that prices is this low. Let's look at it daily to get a very bird's eye view of where we're at. You can see from a change of character, right? Came back up, came down, right? This is a change of character. This is a true essence of what it looks like right here. We got continuous trend structure, created a high, right? Came back down. We got that mitigation of the demand coming back up, mitigated this supply. And what's next? What are we waiting for? What's next to validate this change of character, to complete this break of structure? Hey, man, I got an A student left. What's going on, man? Right here, break of structure. Someone's been really taking notes. Yep, break low. So yes, we are going to see some lower prices of oil. What do you guys think? All right. So this is my PRI, first one right here, and then we can probably see some ranges out here, but expect some lower prices in the pump. So as long as we have continuous news of more oil and no geopolitical situations with, you know, oil scarcity, as we got more oil supply in the world, supply in the US and the markets like that, we can expect to continue to see, from a technical standpoint, lower prices, especially to see, this is what's going to be really key right here, right? Liquidity right here, we want to see break of structure. This is liquidity and break of structure. We want to see that break, and we want to see a retest, and we're going to see come down. That's what we're going to be looking for. We want to see that break, come back down, maybe come back up. Okay, so oil prices, I would be short in oil. I'm bearish on oil. I'm looking to short oil. Obviously, this is not a good place to short from a trading standpoint. Obviously, I would want to see a little bit of a, when it comes down to the 4-hour time frame, I will be looking to short this as it comes up. Let's say, for instance, on a lower time frame, I do expect to see something like this possibly, right? Because it's already buried on stochastic, so I want to see it come down, maybe about right here. But this is the swing high, swing low. right? So for me to sell it, I need to go into my premium, right? Go a little bit down right here. So it needs to pull back a little bit more, get into my premium area. I like to see it get into my 618 right there. Let me move this over. All right, so you can see my fib number 618, 78, 786, 886. This is a 50 level between the purple and green. I like to see it come up my 618, and then and once it come in my premium area, I'll be shorting this bad boy all along. Okay, this is more of an anatomy of a downtrend. Got right here. We got this mitigating of demand coming back up. It came back and mitigated demand right here. It came up, mitigated supply, and it broke structure right there, creating a choke. Then we got a lower lows, lower high, lower low. Come back here, give me a lower low, and I will sell you all day long oil. Please come to Papa. Have the trade come to me. I will short you right here. I promise I will. Please pray to come back, and I will short you, right? So that's what we're doing with oil. Okay, moving on to JPY, US JPY, moving along. So we're gonna go a little bit faster now since we're already into the USD pairs and we're already almost 2 hours into this thing. So let's see how fast I can go through this without getting too much into the weeds for you guys. Okay, USD JPYs, we're expecting the dollar to be weak. Remember, whew, I was like, well, oh, those probably from coaching lessons. Okay. All right, so let's go back to the weekly here. I got to mark some levels real quick. Like we got some areas that were mitigated here. More like this one. Delete that one. Break of structure right here. There you go. We have a break of structure right here. So anytime we have a break of structure right here and it created an imbalance, this is your order block, right? That's the anatomy of an order block, right? To where we have, this is a bearish order block. When you have bullish candle come up, impulse candle, create an imbalance, and you got break of structure. 1, 2, 3, boom. We'll talk about it in our coaching plan, in our coaching lessons. It came back up, mitigated this, created all its imbalance, boom, 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 over the years. And this was back in 2015. Holy smack, we've seen historical levels. And then we got this pin bar candle, which is a very good significant sign from a candlestick standpoint that we have a bullish signal here. And I want to go back and okay. So we got imbalances here. We can see it all lit up like a Christmas tree. If you don't see it, get this indicator from Sonar Lab at FX Prosperity Academy. I hope you guys already got it. Imbalances here. What do we expect that to happen? I'm not even going to say it. You guys already know. We're selling this and we're not doing nothing but sell. We got, so tactics already peaked on the daily, on the weekly. Come on. This is what we're looking for right there. Okay, go to the daily. Oh, without a doubt. Plain and simple. Right here, POI, point of interest. I'm not doing anything else. This is what I'm looking for. This is where I wanted to go. This is where I wanted to come. Okay, come on down. And look, it hadn't even reached, let me see. Haven't even reached our 50% level. Okay. You got it before. Oh, there you go. Perfect. So haven't even reached a 50% level, as you can see, this 50% level, but we don't expect it to come like this, right? It's not going to come straight. It's too easy for you. You can't just short this and for the next 3 months make $2,000, $3,000. That's just, they're just not going to do that, right? So what are we expecting? You can expect to see some movements here. Why right there? I'm gonna show you why. You see this? It came down, came up, came down again, and went up. That is a liquidity area, right? Also for a breakup structure. Okay, so right there is where we're seeing liquidity area. So this is going to be, we're looking for what? Change of character on a lower time frame, right? Let's do that. Look at that. You see this liquidity area? You guys can see this more and more often as I can look at right here. Got continuous trend structure break, came back down. It mitigated the demand. Come up right there. Let's see. Draw it again. Break of trend continuous structure, reach a high, came back down, mitigated the demand, come up and hit this area, which is mitigating the supply and this imbalance. And we're waiting for what? What are we waiting for? Breakup structure. Wow, you guys are catching on. That's right. And what that happened, boom, you should be, look where it's at right now, right? This was not the area to sell, obviously, right? This is not the area to sell. We should have been selling up here. We did. We sold. We came here in this area, right where it was, originally spiked up before it created another move, impulse move, came back down. I got out. And then when it popped up, I'm in sell right now. I mean, and if it pops up a little bit more, that's fine. I'm waiting for a breakup structure. All of this is what? Hello? Right? Profit, money in the bank. Let's get that. Awesome. Okay, you guys got that? You guys got good on you, Jay? Pretty simple, right? It's like a softball pitch. That's a softball pitch. We should already know that one. Okay, let's go to EU. EU, not so much of a softball pitch. Well, it kind of is if you know what you're doing, right? Let's go to the weekly. Look at that. How beautiful can it get? You guys see that? Man, I love this Sona Live, the way it beautifully points that out. It just supply and demand, what we're looking at. You should be doing nothing but what? Hello? Anywhere in this area? Hello? You guys are good? Any questions? It's like this. It's like that old commercial. This is your frying pan. This is an egg. This is your brain on drugs. Any questions? All right. You ever remember that old commercial? This is your frying pan. This is drugs. This is the egg. This is your brain. Crack the egg. Put it on the frying pan. This is your egg on drugs. Any questions? Okay. All right. So we're good there. I hope you guys are very clear. Let's look at a lower time frame real quick, and what we're looking for is a very good confirmation of change of character. Let's go to the 4-hour time frame. Right. So when you get a higher time frame, that you got an overall directional bias, we're bullish, right? So that's pretty clear. We're bullish. Change of we're looking for a change of character on a lower time frame. You can go to the 4 hour, you can even go to the 1 hour and look for the change of character. I either go to 1 hour or 4 hour. Any of those is a very good area to look for change of character. And as you guys can see right here, we went down, we mitigated this, this order block up here. It's a supply, came back down, and we have what we call a break of structure right there. We came up, not quite broke it, came back down, and we're broke of structure. We broke it right there. This right here is nothing but a pullback. That's just playing games with you, right? So what do we got here? You guys see it? What's going to happen now? Hello. This is a good area to buy anywhere in this area, right? Low, lower high. Oh, this is kind of a lower high right here. Lower high, lower lows. This is noise. Boom. Okay. Remember that. Okay, so we should be, I'm long, I'm bullish on EU. So look for EU to really rock it this week, folks. This week, what we're looking at, let's go to the daily. Let's look for some targets. I don't know why it's not showing here. Let's go to the weekly. Let's on the lab does sometime, right? So let's do here. Let's go. This is a good, yeah. I'm in agreement with this order block. So even though the indicator paints the order block for you, you still want to go back and validate when you know market structures and you know the concepts and the techniques of institutional candles and significant price actions or imbalances. You also know order blocks and order flow and liquidity. So this is pretty easy for me, right? So this right here, people will call this support. We call this liquidity. You guys see those liquidity grabs? Hope you do. This right here will be a liquidity grab. Liquidity grab, take the price up, liquidity grab, and what do we think it is going to do now? Right? What do we have down here? You guys see that on stochastics? What's buried to me? Pretty good confluence. That's my story, right? So from a pricing standpoint, from a target standpoint, you can probably see this. Let's go 120 right here. This is where I want to see. Let's go to the daily. What you guys see up there? And this is going to be mitigated sometime in the future, right? That's right. Okay, so EU, we're looking for EU. Obviously, we're not going to see this like this. It's going to be more manipulated, of course, as we can say up and down. Okay, so we're looking at what we're seeing here. Oh, about 1,221 pips over the next 2 to 3 weeks, right? So what we're going to be doing is that we're going to buy, we're going to sell, we're going to buy, we're going to sell, we're going to buy. It says 1,200, but we're going to make it like 3,000 or 4,000 pips on this move alone, because we're going to counter trend this as well, and we are going to also pyramid as we do, right? So every time it pulls back, I'm bullish. So when I'm bullish, that means every time it dips, we what? What's the rule, right? We buy. That's right. We buy dips. And if you're experienced, you can short pops lightly, right? Take a counter trend trade, but we are going to definitely buy dips. Buy dips, right? And dips is going to happen at supports. It's going to happen at market structure, and it's going to happen at imbalances, okay, on the uptrend. But I know what retail traders are thinking. Oh, this is an easy trade, Leonard. This is what do they call it? What are they calling that? Yeah, I know, right? That's a W, double bottom. That's what they call it. We'll call it liquidity, institutional, order flows. We're buying it. We're ready to go. KGU. What does it look like to you guys? Let's go to the weekly and see if this makes sense. Higher time frame. What are we looking? What do you guys see here on the stochastic? How's the stochastic look? What happened when the last time stochastic was buried? How about here? How about here? How about here? Did it shoot up here? Did it shoot up right there? A little bit, right? How about right here? Did that shoot up? Ooh, how about right here? Did that shoot up? Are we there yet? Right? I think so. Let's go. All right, let's go. We have a pretty much a touch. Let's go to daily right here. I like the daily. We have a change of, let me see here. These are good solid order blocks, but we also have another order block here as well. These are like smaller order blocks here. Wow, but this is a major order block. Are we there? Oh yeah. Oh yeah, we're there. All right. And then look like we're getting ready to have, look like we got a, when you go to the lower time frame, do we have a choke? You guys see it? Come down, right? Come down here, come down here. It broke this continuous trend structure, or CTS, I call it CTS. Came up, came back down. It mitigated this, well, basically it came all the way up here. It mitigated that, basically that supply, came back down in this area right here, kind of mitigated this demand. And we are waiting for basically this area here. Break of structure. Bye-bye. All right. So that's GU, right? Go to a higher time frame. This is what we're looking for. Oh, we're there. You can see it coming down here, mitigate that. And then this bad boy is going. This was a nice trend this way, and now we're in a choke, getting ready to go the other way. Okay, so GU and bearish. Okay, USD chef. That's what we're doing with USD chef. Ooh, USD chef. Dollar's going down. maybe a little bit of a pullback. This is my change of character. I'm bearish on UJ. Okay. Notice GUEU bullish, but USEF bearish. Okay. All right. So I'm expecting SEF to pick up strength. I do expect a little bit of pullback now, because the dollar SEF could be even weaker than USD at times. So you could see a little bit of this, So don't be surprised to see this before it breaks. Okay. So this could be a little tricky. The USEF will range more. This is more of a range bound pair before it breaks. Okay. So USEF is a little bit trickier trade than UCAD. So if you pick the difference between UCAD and USEF, they both range, but UCAD is a better pair to trade between USEF and UCAD. If I were to pick a base US based currency, I'm giving you guys a little bit of tidbit. USEF is a little bit more advanced. UCAD would be a little bit more less advanced and more intermediate if I were to pick between the two. Okay. Okay, here's UCAD. All right. Now, UCAD, it's already buried, but that doesn't mean, even though I'm expecting dollar currency to be weak, you got to also think about what I'm expecting CAD. I'm expecting CAD currency to be weak as well. Now, not at the same darn time, but I do expect over time, right? So right now we got the CAD already being buried. What I can expect to see, right? We think about, let's put this on a swing low, swing high deal. I can't sell this, right? I can't sell UCAD to go even down further. I can only buy, right? This right here, when you think about from a premium standpoint on the daily, and you see UCAD is already in a very stochastic, it's at a key order block, and it's in my discount area, you can't sell. Even though you expect the dollar to be weak, you can't expect the UCAD to keep going down. Am I expecting UCAD to go down? Yes, absolutely. I'm expecting UCAD to go somewhere in this area. Let's paint this area. So I do expect CAD to go a little bit lower, right? So I do expect it to come down, but I do expect it it can't come down without coming into my premium zone area. So I do, WTI is strong, CAD dependent on oil. It is a little bit of it, that is true. CAD is somewhat dependent on oil. So why not come down to 1.2 to mitigate an imbalance at 1.22? It will. Now, I'm not saying that it can't come down a little bit more. It could. It definitely could. In fact, I could, it is a possibility that it could come down. Don't know exactly when, but this right here could come down a little bit more. It could come down a little bit more in this area. But for me to get into a trade, I can't get into this trade right now. I can't sell it. I'm only looking to buy, right? So I'm going to buy, and I'm expecting it to mitigate these imbalances up here, right? So I am expecting it to come down, it'll come up, somewhere in this area, and then possibly come down, maybe here. It could come down in this area, and then we expect to see some, CAD come up. Let's go look at the monthly. Let's give us a good bird's eye view. Well, on a bird's eye view, from a UCAD perspective, this looked like this could be going down even further. Maybe I'm wrong. I do expect a little bit of a buy on the lower time frame, but overall, I'm bearish. UCAD, whew. Could this happen? I don't know. I don't think it'll happen like this right away. I don't see that happening right away. I do expect it maybe doing something like this, but I don't see UCAD coming down this low. I would have to wait and see what happens in this location, because right now it's definitely in demand, but my stochastic is high on the monthly, right? And come back to the weekly, right? This is it. This is in right now. There's liquidity in this area right here. Right, retail support, but this is also liquidity. I would need to see what does price do when it comes down this low. Right now, it bounced off of liquidity and it's ranging right now in this area. So it's creating another liquidity area right there. So when that happens, you got to expect to have liquidity mitigated even up here. So we got two areas of liquidity that need to be mitigated. Now, it's coming off of this liquidity. So I'm seeing UCAD possibly coming up here first. Right, this is on the week. I'm looking at the weekly time frame. And believe it or not, you wouldn't be surprised if it does this. Come back down here and then shoot back up, right? I don't see US dollar coming up that far for a very long time. For the next 3 to 6 months, I can see it going into this range. If not, I can see it coming back this low to liquidate this area before it shoots back up. Okay, this is going to be very tricky to see. I'm long UCAD right now. Well, I think I'm out of UCAD. I think I'm done out of UCAD. Go to the daily time frame. Right now, I'll be long in UCAD. This is what I would be doing. I'll be long in UCAD, and yeah, I'm thinking that CAD would be a little bit weaker than CAD, than the dollar, and therefore I would expect the dollar to overtake CAD all the way up to 128. So if oil is weak, I'm expecting the CAD to be weak, right? And therefore I'm going to expect the dollar overtake the CAD to take this back up from a technical standpoint, and then come back down, and then possibly go lower, not sure. But then I do expect CAD to pick up strength in the long run. We'll see. We got CAD news coming up with the Canada unemployment rate on Friday. And then next week, we have the census rate, the Bank of Canada on the 13th. So this is going to be interesting to see. But right now, while it's buried right now in the liquidity area, I do expect to see a bounce to mitigate these imbalances. Okay. NU. Oh boy. Yeah. Okay. So here's what I'm seeing on UCAD. I mean NU. So NU right now, it's at this imbalance here of this order block, and I'm expecting this bad boy to drop. I'm not sure how far, but maybe it's going to definitely drop. I can see it dropping to this area before it shoots back up. Okay, so I am expecting a pullback. So this is what it's doing right now. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. I do expect a little bit of pullback and then come back up. Okay. 50% on fib, would it be a bit lower? On a daily, let's see here. from a swing high, swing low standpoint, you're in the discount zone already. So I am expecting a little bit going down, but this is definitely in the buy zone, if you're thinking about it from that perspective. Let me see here. Let me do it the other way. This right here. It's already in the 618. Right, so it's already in the 618 level from a pullback standpoint. And it already went down to 786. Let's look at the 4 hour. So this is definitely a very good area to start looking to go long again on NU. Yeah. So, but I'm a little bit more bearish on NU. I do expect it to be a little bit more move here. Let me see here. So it's just got a swing low, swing high. It's got like an automatic fib tool right here. So based on this, it's saying this swing low and this swing high, which I could see that. Right? I can definitely see that. So this would be more of a 618 level. But if you think about it, we're here already at a 4 hour order block, but there is an order block right here as well. So from a premium and discount standpoint on the 4 hour time frame, I can see NU being pulled back a little bit more. If you're looking at this right here, this is not quite in the, let me go to the daily. Oh, I see what it's saying. It's going from this swing high, this swing low, not basically this swing high, because this is kind of an equal low from a daily standpoint. Go to the 4 hour time frame. Okay, yeah, okay, I see it now. So this is an equal low. Okay. Yeah, I can see it being bearish a little bit more on NU, but it could also range around here before it goes up. But I do expect NU to go up a little bit more. In the overall directional bias, if you're looking at the monthly, right, I do expect this to come back up. Come up, come down, definitely come back up. So this would be my target for NU up here. Overall directional bias, NU is bullish, but right now from a counter trend standpoint, I'm trading down. So I'm taking a counter trend trade. I think I'm out of NU. I think I got a little bit more of NU, and then I'm gonna take this up. Okay. So overall directional bias, NU, I'm bullish. I'm going to sell a little bit, take this counter trend trade, and then I'm gonna be buying once it gets down here. Let's take a look at AU real quick. Look on the overall time frame. Let's look at AU. You can see what AU has done. So it looks like it's getting ready to do this. This is my overall directional bias on AU. I see this as a point of interest sometime in the future, right? I don't see it going anywhere else, but just definitely going to go here. Yep, basically the same. So let me go to the smaller time frame on the 1 hour, on the 4 hours, on the daily. So on the daily, this is what I'm looking at. So it came up here, it reached a high. Ooh, I definitely want to see a pullback. We got a change of character here. Higher highs, higher lows, higher highs, higher lows, higher highs. I like to see a higher low. then let's go, right? So I'm looking to sell this short term. Overall directional bias, I'm definitely long, but this is not an area where you want to long, right? This is not where you want to long when you have an equal high liquidity area, right? And you're right there where you have some the order blocks, the liquidity right here. This is all liquidity. So this sell liquidity, and then you have some imbalances here that need to be mitigated. You guys see that? I don't see it going that low, but I'll tell you one thing, I wouldn't count against it. I'll go ahead and copy that. Oops. Did I do that right? We got imbalance just there. So I do expect a little bit of a pullback. In this area, and then we're going. Okay, so I expect a little bit of a pullback on AU, especially on the daily. When you're looking at the stochastic, that's another clue right there. You see how peaked it is? It was peaked right there. And look what it did when it was peaked. It pulled back, didn't it? It did a little bit of pullback. We're peaked now. So this is a counter trend trade. This is not a trend trade. This is a counter trend trade. So you can wait till it gets to this order block and buy, or you can sell and try to make a little money. Nothing wrong with that. I'm trying to catch about maybe 200 pips out of this, and then I'm gonna take this up. So this can happen over the next course of the week or the course of the week. If not, you can definitely wait till it gets down here and then buy it. Okay, that's AU. Let's look at EJ. EJ, ooh, short EJ. I wouldn't do anything else. All right, I'll be shorting the EJ. I'm bearish on EJ, looking for this to fall back at these levels. Just look at these levels. We'll go to the 4-hour level. Yeah, I would be looking for EJ to come down to at least to this level right here. This is all liquidity level. If you're looking at it a little weekly, these are all liquidity level, but you have some imbalances here. Let's go to the 4-hour. I'm not in EJ right now. I'm already in enough pairs, but I do expect EJ to come back down at least to this level here. I can see it down before it comes back up. Okay. Now it's not going to come down like right away. It could come maybe here, mess around up here for a little bit. It may even go up a little bit more, and then before it drops back and then come back up. Okay, because right now it's already showing the sign of a change of character. Right. So we got this. Let me see. I'll show you what I'm talking about. Came up, came back down here. It's already starting to come up and mitigate this area. And then we'll just be looking for a break of structure. Once a break of structure, it's going to come down. Okay, that's EJ. Let's look at GJ. Okay. Oh yeah, I'm looking for GJ to come down as well. This would be my area target. I think I'm still in GJ. Oh, I think I'm out of GJ. GJ. Yep, I'm in a few more trades for sell for GJ. I'm expecting it to come down here and then bounce. Okay, so that's what I'm looking for on GJ. Could it come down here? It could. Let me look at the overall time frame. It could come down here. I do see that from an overall directional bias, but either way, I am bearish on GJ. It came and touched this area, and it hasn't been here since 2016. So I do see GJ coming all the way down to this level here. So I'm definitely bearish overall on GJ. That would be my target. I don't see it coming back that low here. And then, but this is over the course of a few months, right? That's on a monthly. So on a daily, this is what we're looking at. It could come down. Well, it's getting ready to come down now. Come down, hit this area. It could come up. Finally come down before it comes back up. So that's what I could see what's happening on a daily with GJ. Okay, because it's already forming a change of character. Let's go to the 4 hour. There you go. Right here. We got a trend up, come back down. Let's see. Oops. Come up, come back down, came back up to mitigate that. Came down. This is almost giving you a double breakup structure. So this is a breakup structure there, and it's another breakup structure there. That retest come down. We're looking for. This is the liquidity area breakup structure. That's peaked, come down, mitigated this demand, mitigated supply. It broke that structure, came down. It's giving you higher highs, equal highs right here. Now we're looking for another breakup structure and lower lows. This is definitely a target with GJ. Okay, so bearish on GJ, Chef JPY. I'm definitely bearish. All right. For our time frame, we're looking for a breakup structure right there. This breakup structure. That would be a change of character. Once this break, boom, it's going down. We haven't been this high. This is Chef JPY on a monthly chart. We haven't been this high since 2015, then 2014, and look how far we got to go. We got a long way to go, at least to here. Now, could I see it come down here sometime in the future? Oh yeah, Chef JPY got a long way to go. I definitely see that in my near future, maybe 2023, all right, on a monthly standpoint. But let's picture the day. Let's go short term. What we're looking at. I'm bearish, right? I'm going to be bearish on Chef JPY for quite some time. This is what I'm looking at. Okay, I'm going to see it break this structure, come back, mitigate this, come down, mitigate this demand, come back up, mitigate this supply to be an order block sitting right there, a new order block, and then come down and sit this area. So this is going to be Chef JPY over the next 4 weeks. Okay, definitely speaking. I'm picking on JPY just right now. It's been speaking on but for the last month. So and knowing that it's been historically high and bullish because of the Japanese weakness, I do expect Japanese yen to pick up strength and do the same darn thing, right? So this is CAD JPY. If I'm going to the daily, this is what I'm expecting to happen. I'm bearish, obviously. This is the liquidity right here. Break of structure is what I'm looking for up here. And then obviously this is, let me see why I had that marked up. It came back, it hit this order block, exceeded this order block. So this break is called like a breaker block. An order block that's been compromised is called a breaker block. So expect to see that as a target to come down. It peaked here. This is where I sold. I sold it way up here, came back, got some of that money, and I'm shorting it again, right, on a daily. I am shorting CAD JPY like no tomorrow. Now, in order for CAD JPY to come down, that means CAD has to be what? That means we're expecting CAD to be weak. Okay, so JPY is strong, and then we're going to expect CAD to be weak, right? So what am I going to be looking for CAD news on Friday with the employment? I don't know how employment right now in CAD is. I think it's pretty stable, or is it kind of weak? But I don't know what the employment rate is, but I'm expecting it to be kind of weak if it could, right? Let me see. Let me look at historically to CAD unemployment. Employment rate was 5.5. 6.5 was week before that. I mean, a month before that, it was really bad in February. March was pretty strong. So I'm looking to see what happens. It might be weak, yep. It might be not doing too well right now, pretty flat maybe, all right? So that's what I'm gonna be looking for CAD JPY. And I expect to see some movements, you know, with yen strength and then also CAD weakness over the coming weeks, okay? So don't be surprised to see something like this, right? And then boom, right? So I would not be surprised to see that. And what that will be is right here on the 4-hour time frame. You guys can see it right now. What is this right here? I've been talking about it all day. It's liquidity, right? That's demand liquidity. And it needs to break this demand liquidity. This was creating a supply liquidity right there. And supply liquidity needs to be mitigated, right? So when it just created the supply, it came down, it bounced up, bounced here, and then it came back up and mitigated the supply. Now it needs to come back and mitigate this area of demand and then break and go continue on to the next order block, right? And liquidity, right? So that's going to be a liquidity graph, come down. And CDJPY on a daily, look at this. Liquidity. Liquidity. It's already been mitigated. That's right. That's what I'm looking for. I'm bearish. NJ. AJ. Liquidity. Demand liquidity. You got supply liquidity. Same thing. bearish. AJ, these are good setups. These are very good setups. So with AJ and NJ, what do we need for AJ and NJ to go down? NCD. Oop. JBY to pick up strength, and that strength need to be more than odd and NCD. Boom. But if odd and NCD gets weak, that means odd NCD, odd USD, we can see a little bit of a pullback. Now, I do expect a little bit of a pullback on NCD and odd USD, but not as much. But I'm going to expect to see a huge move on odd NCD, odd and NCD JPY, not because I'm expecting the strength on the dollar, I'm expecting the weakness on NCD and odd. And then here, the reason why I'm going to see a big drop versus a small drop on NCD USD, again, is because I want to see very, 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 very strong strength currency over the coming weeks that just slam NCD and JPY, okay? That's why we won't see as much. We'll probably see a pullback versus a reversal. Because you think, well, all NCD and JPY and all JPY and NCD JPY, that's kind of the same base currency, right? Well, yeah, but we're going to see USD maybe be like maybe third, fourth, maybe fifth, you know, strength. And then the sixth and seventh would be like NCD and AUD, right? And then number one, JPY, you know what I mean? Maybe number two would be CHF, maybe something like that. Or probably EU, E, and then GPY. And then CHF would be like in the order of currency strength. So being top number one, and then the lowest be the weakest, I'm expecting odd NCD and NCD, odd and NCD to be the two bottom. USD would probably be close, but it's stronger than them. So therefore you expect to see some pullback on NCD and JPY, but on odd USD and NCD USD, but on odd and NCD JPY, expect to see a huge dump, right? And a lot more just for the simple fact that we're in high supply, okay? EG, what are we looking at? Euro pound. Ooh, look at that pair go. I know I have made some money on this one, but I'm out of it now. All right. Does it look like the monthly? Ooh, look at that. You guys see it? What's that? I've been talking about it all day. What is that? Liquidity, right? Liquidity. So this is EG, and this is on the monthly. And we can say we've been pretty buried here, but even though there is some very strong imbalances here, right, that definitely needs to be mitigated sometime in the future, sometime in the future. Now, I don't expect to be that within the next couple of weeks. Well, let's see. And the reason why I say that is for the simple fact that we've been buried. We've been buried. And the last time it was buried here, 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 what did it do? Anyone? What did it do? Yeah, yeah. Yeah, that's exactly right, right? But the point is, how far, right? That's going to be the clue. We don't know how far, right? So let's look at the lower time frame to see exactly how much do we expect this pullback from the liquidity area of where it's at right now. Let's look at the daily. It's been pretty high, right? So it already came up here. It already mitigated this area right here. It already dropped. So I do expect it to drop even a little bit more. Let's look at the weekly. Oh, it's coming back up. So it looked like this is going to be the point of interest for EG. And it looked like it mitigated this area, right? So this is definitely a point of interest. This is definitely a point of interest. Could I see EG go that high? Yeah, I can. I can see EG going, EG, euro pound going in that high. It can go this high, or it can go as high as this, right? Now, for it to do that, that means euro going to have one hell of a quarter. And then hopefully the euro news coming out in a couple of weeks be that strong, an overpowering pound to take it that high over the course of time like this. Boom. That makes sense? You guys see what I'm saying? So all this would be noise as it's doing this. Okay. To do that, to do what? To come down here. That could happen. Okay. So we got to be ready for that. All because it got these imbalances, and we know the market is an equilibrium market, right? What goes up must come down. I've been riding this high for quite some time, right? Look at all this. Look, it's on the monthly, right? So that's liquidity. Up here. This is sell liquidity, supply liquidity, demand liquidity, right? That's already been mitigated. It doesn't need to go any higher. If you look at it, where is the probability of mitigation needs to happen? Which one would you guys say? I'm gonna put this as yellow, as number 1, and red for number 2. 1 or 2? What's next of mitigation needs to happen? That's right. That is right. Man, Brad, you're sharp, bro. Man. You're gonna be a master trader. You and Lev gonna be master traders. I don't see anybody else speaking up. Weaver, you here still? Where's Weaver? Gene, I know you there. You on it? Did I put you guys to sleep? Okay, all right. Come on, this is key important, guys. This is key, powerful right here. Okay, EG right here in the future. There you go, right there. Coming to a chart near you. Featuring EG short down 2.70. Okay. But right now we're going to see a little bit of a pullback. Okay. We're going to get this mitigation. And then let me see this right here. Let's go to a lower time frame. It's like it's been mitigated right here. It's coming up a little bit more. Just tactical is high. Yep, I see this coming down more. So if I should have shorted this a long time ago. This was an area to short. I can see it coming back down, and I would need to see what happens after this. Go to weekly. Oh yeah, this got room to come up still. So on a weekly, on a monthly, yeah, this got room to come up. So on a daily, it's going to come down, and then it's going to come up. Okay, like I said, it's going to do something like this. So I do see this all coming up. Okay. Something like that. Okay, so that's the market structure that I see. Picture this all going up. Okay. So right now, I would like to see it come back down. Right now it's in my premium, swing low, swing high. I like to see it come down about in this area right here around 618. And then I'll be looking to buy. Okay, EG. Now I'll be looking to buy EG to about this area. Do I think it's going to go any higher than that from a weekly standpoint? I don't see it coming up here, way up here. So from a weekly standpoint, let's put the fib here. Swing high, swing low, right? So right now we're in the demand discount area. This is where you buy. Once it gets in this area, 618, the fib can go in any time frame, right? You can barely see the numbers here. Let me pull it out like this so you can see the numbers. So swing high, swing low. This is the supply liquidity, demand liquidity. It's already mitigating, come up. This is where you want to start looking to buy, sell in this 618 area right here. But if you look in this 618 area, right behind it, what's there? So I'm gonna mark it right here. This is a 618. And I'm gonna move the fib. You probably can't see the color now when I move it. Look at that. What do we see? An order block. Okay. This is on a weekly. I can see it coming somewhere around here, this area, before I look to sell it again. So I'm bullish right now, but long term, on a higher time frame, I'm bearish. But right now, it's already bearish. It's already been mitigating this demand. It's going to come up, and I want to see it come up. I don't see it's going to come way up here again. Been 1, 2, 3, 4, 5, 6 times. 1, 2, 3, 4, 5 times here. So I want to see it come up and come back down. Okay. And if you're looking at it from a chalk standpoint, oops. From a chalk standpoint, it's already been come down, come up, come down, broke structure. It's already in a choke, change of character to go up. Okay. So what I'm trying to think about is looking at a lower time frame. Looking at a lower time frame. What I'm trying to do is looking to see what a change of character is for going up, right? I'm looking for this change of character. And you can see it right here. Come down, come up. Broke this right here, came back. It mitigated this supply liquidity, came back down, mitigated this demand liquidity, and boom, it broke structure. It broke structure. So now this is a choke or going up. Okay, it's already down here. I'm going to see this come back up. Okay, that's EG. All right. Let's look into pound shaft. We'll click on a daily. Pound shaft, oh yeah, this is going up as well. So I see pound shaft going up. So this is going to be in a range, right? Because it's correlated, it's uncorrelated to euro pound. If you look at euro pound and pound shaft, they're almost highly uncorrelated to one another, right? So I do expect this, if you look at a higher time frame, oof, look at this. You guys see it? Ooh, this got a long way to go, right? Long way to go on a higher time frame. I'm nothing but bullish on pound shaft. So I expect euro pound to go all the way down. So I do expect pound shaft to go all the way up, right, in the next 6 months. But in the meantime, on a daily, it's been, you know, ranging here, right? But right now, you can say, you're safe to say that this is definitely in supply. I mean, demand, right? This is all liquidity area. You're in a key area. This is the daily time frame. Let's go to the weekly, right? You're in a very good key area to buy up. So on a daily time frame, I'm looking to buy this to go up on pound shaft, especially when you get stochastics down. I expect pound to pick up strength against Swiss francs and have this thing ride up. So right now, in fact, when the market opens up, I'll be looking to put a trade on pound shaft just by looking at this right now. This looked like a really good solid setup, folks. I'm being seriously honest with you. I'll put this up. So on the, this is the weekly. You got that's right here. Just got this liquidity area right here. Got demand liquidity, also known as retail support. You got stochastics buried here. This is on a weekly. If you go to the daily, this right here is going to be my ultimate target. Right here. This is what I'm seeing. You see this? This was a big imbalance here. We go down to the lower time frame. I'm going to refine my order block here, and this is my order block right there. This is where I'm seeing price going to sometime in the future, right? So this is where I'm going to be buying. You can see it going in here to this liquidity area, this bullish liquidity area. Got the moving averages there. It may come back down, and it may even come back and do another test, or come back here in this area and then go here. Why here? Because this would be another area of liquidity, or also known as resistance, right? And then come back down, test this area, and then shoot back up. Because this is another area of liquidity right there, right? Also known as retail resistance. Okay, this is what I'll be looking for to buy pound shaft. Now, the question is, could pound chef could come a little bit more down? Well, let's take a look at it. Let's see, what the probability is that for it to come down. It could. I mean, there is some demand, but all of this has been mitigated. It's pretty balanced down here, to be honest with you. There's no imbalances or insignificance in price action that needs to come down to actually mitigate anything in here. All this was needed to come down, right? All of this needed to come down to mitigate this, because there were definitely some imbalances here, as you guys can see, that was basically mitigated. We had this imbalance, and we have this imbalance. All of this has been mitigated already at some time in the future, right? Now I'm taking the time to go through this because this is what I do. This is my life. This is my income. This is what's going to take for you to take this time to really learn this and take the time to do it right. Why? Because this is my plan. I'm doing this not only for me, but I'm also doing it for you to learn, but I'm also creating my game plan of what I'm planning to trade this week. So when I'm looking at pound chef and I'm looking at all of the confluence and looking from an institutional standpoint, where the market makers want to take this, and have they mitigated enough their positions as they took this up? Haven't they mitigated enough to say, we're done, let's take it back up? Because why? Why is that? Because they got to go back and mitigate that. That hasn't been mitigated, right? So they're still in upside down from this area up here because they've been pushing price all the way down. You guys seen that, right? Lower lows, lower highs, lower lows, lower high, lower low, lower high. And then it's been in this area, they've been liquidating, right? They were in a range in this area right here. They were in a range, right? And then they pushed it back up, right? Now they're in this other range right here, and they could be in a little bit more range, you know? It could be in this range for a little bit area, or they can be in this range for a little bit as well. That's possible. So it's possible they can do this and then shoot up, just like they did here. Up, down, up, down, up, down, shot up, right? I can tell you here, this is not the area to sell. Would you agree? Is this an area to sell? Would you guys want to sell that? You think this is a good area to sell? Anybody down for selling? Anybody want to put some money on shorting this? This is, you want to short the lows, right? So if anything, even if it doesn't go anywhere up here, if it goes here and it starts to show some signs of going down the other way, guess what? I'm gonna get out, take my money, I'll trade it down, get out, take my money, and short it back up. And how I'm gonna do that? Well, every time it pops, I'm gonna short it. Every time it pops. So when it popped up here, this was the time to short it. Right here. And every time it got buried, that was the time to buy it. Right here. Right? Every time it buried, boom. Every time it popped. Right? So what do you think I'm gonna do now? I'm gonna do that. Let's take a look at back in the range, what it did. Every time it popped, look, every time it popped, what did it do, guys? Every time it popped, what did it do? It dropped, didn't it? And every time it buried, right here, and every time it buried here, and every time it buried here, it buried there, it peaked there, and you can see how it looked right here. And here's the funny thing, that does not look like that, does it? Because when you have something, on the oscillating looking like it's going up, and this one's looking flat, you have a divergence brewing up right there. That's a divergence. How is the market oscillating up and you got this looking flat? You got a divergence. You got a divergence sitting there, right? Our price is going up and this is going down, right? Or this is coming down and this is coming up. Either way, you have an area of divergence brewing up. And as you can see, it's getting narrower and narrower and narrower when this doesn't look like it's going any narrow. But the point is, the most important thing is not that. The most important thing is every time this peaked, you want to short it. And every time it buried, you want to buy it. And when it's in a range. It's right there. Look at this. Up here, it peaked. You short it. It peaked. You short it. It got buried. You go long. It peaked. You short it. And where are we at right now? Where are we? Not the time to sell, right? At least we're going right here. So for me, I'm taking it long. I'm gonna take a trade. I'm gonna go long. Soon the market open on this one. Okay. Okay, let's go back to the other charts. Let's go to UCAD. We're gonna wrap it up here. There's liquidity right there. What are you guys thinking? What should we do? Short it or go long? What do you guys think? Weekly time frame. By heaven, that's right. All right, so this is what we're doing. I'm going long. Already long. I'm already long EuroCAD. I'm definitely taking this up. I definitely see 150. Let's look at the monthly. Just take a look at the monthly real quick. Let's take a real good bird's eye view. Look at that, right? You can see way up here. We got more room up here than we do down here. This is a ceiling, this is a floor. Let's take a look at this. This is the monthly. Stochastics on the oscillator. Oh, we've been buried, right? Euro's been beat up for a whole year. It's time. It's been undervalued, right? And it's now time for Euro to pick up some strength and really start kicking some butt here over the coming months. This is EuroCAD. Wait, that means we expect CAD to be weak? CAD JPY, EuroCAD, USD CAD. Holy smack. CAD JPY. Oh yeah. CAD JPY to go down, Euro USD to go up, EuroCAD to go USD to CAD, EuroCAD. Yeah. You darn right. Okay. So definitely you want to come up here. This is going to be a first course of action here, right? We're going to come up, we're going to mitigate this, we're going to come down, we're going to mitigate, we're going to come down. All right, that's what I'm looking at. EuroCAD, pound CAD. Whoa. Pound CAD, this is on a weekly. Let's look at it from a daily. Wow. This is the time to sell, right? This is where you should be selling, right? Anyone? Matthew said buy. Yeah, I agree with you. Nice. Let's buy. Absolutely. EuroCAD, pound CAD. That means we're expecting CAD to be weak. Yeah. This is a sweet setup, folks. This is an edge, right? This is an edge. Buy. You buy or forever hold your peace. Please buy. Do something. if you just get a demo, just push buy. Just get a demo. I'm telling you, on a demo right now, push buy. Well, not right now, but when the market opens, okay? Make sure you buy right here. We're buying to this right here, okay? Pound CAD. Right here, guys. 1,000 pips. You guys see that? 1,000 pips. Anybody want 1,000 pips? Anybody? 1,000 pips. You see my voice start to get a little bit more aggressive. I'm confident. This is the edge. This is like getting out my seat. This is like me coming to your house and push the button. I'll push the button for you, and then I can just come back home. I'm telling you, this right here, Euro CAD, pound CAD, it is by heaven. All right? You're odd. Oh, yeah. Look at this. You guys tell me. Yes, yes. Look at this right here. Look how it came down, came up, and then it broke structure. Just all kinds of, let me see, we can put it about right there. Yeah, this broke structure. But there's another one up here. This one created some imbalance. All this is balanced out, to be honest with you. But we did have some liquidity here. This is all liquidity. This is on the daily, right? Let's look at the weekly. Woo, look at that. Oh my, oh my. Now, don't get me wrong now. Could it come down here? It could, but I doubt it. I doubt it. Let's look at the monthly. What is all this? Oh, there's some serious imbalance here, right? Stochastic is buried weekly. We're at a very key supply area. Now, could it come down here a little bit more? We're talking maybe another 369 pips. It could. Now, don't get me wrong. It could come down another 369, but I don't see that coming down anytime soon. Let's look at the daily. This is Euro odd, right? Right now, I can tell you I'm long Euro odd. I'm long. Let's look at the 4 hour. What you can do is look at this. Let's look at the lower time frame, right? Look what it's doing here. It's coming down, came back up. For some reason, came in this area right here, right? Came down. This is definite liquidity area. Coming back up where it created a price order block right here, because it came up and then it created an imbalance here on a lower time frame, just like a 4 hour order block. Then it came down and it looked like it is going to do what? This right here is a break of structure. Now, what you can do is you can take a buy here, or you can take a buy here. Now, if you take a buy here, it's a little bit more aggressive. Here's a little bit more conservative. Just either way, right? The good thing is stochastic is buried on the 4 hour. You go to the daily. It's basically buried. It's coming up. Weekly, it's buried. Monthly, it's buried, right? There's been some serious, look at that. This is down more than enough. So on a daily, I'm definitely buying on Euro odd. Okay, I'm definitely buying. And I'm buying till it gets up here. This is what I'm looking for Euro odd to do. Okay, this is at a key area. Could it come down a little bit more? If it does, take another buy. But this is definitely in demand area right here. This is all demand. Anything in here is buy. Okay, pound on. Oof. Look at this. Weekly. What do you guys think? Oh, buy. Yep, I agree. I'll buy with you. I don't think it's a sell. You don't sell now. I'm doing nothing but buying. Nothing but buying. 4 hour. This is definitely a buy for me. Okay. So that's all I'm doing. So you're a CAD, pound CAD, you're odd, pound on. We are definitely going long. Look at that. I'd rather go long, and I know this is going to be my target point of interest first of all, right there. So we're talking 700 pips right there. Change of character. You're going to see some awesome movements on some smaller time frame. Going on a 4 hour time frame. Looking at a change character right now. Look at that forming. We're talking, we got price coming down, creating a high, mitigating this order block right there, coming back down. What are we waiting for? It's this right here. What are we waiting for? Right there, break of structure. And that'll be a confirmation. It'll probably come down like that and then go up. Okay, so that change of character is already starting to form. So this is where I'm buying. And when it comes up and it comes back down, this is where I'm adding. Okay, this is where you're going to add. This is where you're going to pyramid into the trade into more positions. This is target imbalances. Okay, this is where we want to go. It's forming that right now. Okay, and you can even take this and it'll probably come down. And this is another trade you can get in. You don't have to get in right here. You can take it in the test trade right there and then come in with a full standard trade right there. Okay, that's a way to do it. That's another way to do it. That's pound on. Okay, your NCD. Going to the weekly. Ooh, what are we doing here? Oh my gosh, these are some setups. You guys seeing this? Are we selling? This is an area to sell. This is a weekly time frame. What are we doing? Oh, without a doubt. This is the edge right here. Look at these imbalances. On a weekly, let's go to daily. Ooh, yeah. We got a chalk right there. Get ready to form. Let's go to 4 hour. Let's see what it looks like on the 4 hour. Right here. Boom. Come down. Come up. Mitigated this location right here. That's a supply liquidity. Come down. Mitigated this demand liquidity. We got a structure. BOS. Sounds about right. Once this happens, reversal on a higher time frame is complete. We are complete. I'm already aggressive. I'm already in this trade. Look at, come down, come up, break of structure. We got to change the character. And this is going to be gone. Okay, change of character. Most retail traders will call that the double bottom, but I'm already in it and it's looking good. Okay, so this, if you look at the weekly, you guys can see the order block here. This is a very good order block location. This created an imbalance right here. This imbalance was filled. This broke structure. It broke the internal structure, broke outer structure. This is a very good solid call out from Sonar Lab. This did a pretty good job in identifying that order block. Right here would have been a perfect time to buy. I think I'm already in the buy right here. But just look at this mitigations. Look at this imbalances on the 4 hour and the daily and the weekly. Look at all of this imbalances. This is all got to be mitigated. Okay. So let's take this thing up, come down, let's re-enter. Let's take this all the way up. We're looking at 1.724. That's possible target for sure. Go to the weekly. Ooh, yeah, look at that. That's where I'm taking it to. All right. Pound NCD. Ooh, are you serious? These are some really good setups. Oh, wow. Look at this demand liquidity right here. Look at all this liquidity grab. Liquidated, one shot up. Liquidated, shot up. Liquidated, shot up. Stand down here. Looks like it liquidated to me. All right. Liquidation. Buried. Buried here. Liquidated. Buried. Are we there yet? Each time it went down, it did what? Wow. What a novel idea. I'm going long. Pound NCD. Bye. These are good setups. Hope you guys are seeing it. Pick one. Don't do it all. Pick one. Let's get these pips. CAD Chef. Oh, this thing looks like it's going to come down more. Let's go to the daily. Oh, yeah. Oh, yeah. This is coming down. You guys see it? You guys see this? This liquidity. All right. It's got to be mitigated. Well, it's been mitigated, but this one right here, you guys see this right here? Look at all this. It's all liquidity. So it's got to come down and mitigate this. Now, what I could see is potentially go to the daily. This is what I see right here. I can see price coming here before it shoots up, or it can also come down here. Okay, but either way, CAD Chef, that's a short. I'm shorting CAD Chef. I'm bearish. Okay. All right, one more, and I'm gonna let you guys go. Let's look at Bitcoin. And we're gonna call this today. I got all my setups. Okay. Oh yeah, Bitcoin's at 46,000. Okay. Got all my setup. You set for the week. You just got to pick one. I just went through a bunch of them. I know, right? Okay. Here we're looking at, ooh. Yep, just look at this Bitcoin. Bitcoin even working on imbalances too, right? Look at, wow. Okay. So I'm bullish on Bitcoin. Bitcoin has already came down. It hasn't even reached target yet. And where is target? Right here. Okay, we're looking at 50,448. Okay, so we're looking at Bitcoin to hit that much. And then think about this right here. All this was liquidity. Okay. And we'll go over liquidity training so that you guys understand what is liquidity and how to trade liquidity. Okay. And why is liquidity important? Okay. So this is where I'm seeing Bitcoin 50,000 coming back. Retest that. Come up at that area. Come back. Okay. Right here. That's an order block. I don't know why it's not showing up, but that's an order block. Maybe it's showing up on the 4 hour. Maybe on the weekly. No, but it didn't show up. Okay. No, 4 hour it will. You see, that's why even though the Sona Lab is great, it doesn't give you everything, right? You got to be able to know this, especially when you have this right here. I got a break of structure right there. Hold on. Okay, that's a break of structure. So anytime you have a bullish move up, it's the last candle bullish candle before the move that caused an impulse move, which is large movement candles that creates an imbalance and it breaks structure. That validates this order block right here. Okay, then you got this lot of movement and boom, it came down. Right, so why it's on a ladder and trading, it doesn't do everything. You can't rely on indicators. You can only rely as a tool. You guys see that? You guys see? Would you guys agree with that? That makes sense. Bitcoin at 50,400 within the next few days, maybe a week. It could be a week. Sorry about that. So let's see, 1, 2, 3. Yeah, I can see this happening within the next week. You guys know why, right? Why does it need to come up here? What's over here? What's this over here? You guys see that? Imbalance, okay? And then there's an order block. That last bullish candle order block before it created an imbalance, before it created an impulse candle move right there. That's where it needs to go. It almost got there. Pull back a little bit. Expect to see Bitcoin 50,004. Pull back. I like to see a little bit of a pullback. It may pull back this low, or it may pull back just right here to this liquidity area up here as well. Okay, that's an area of liquidity. Anytime you see price move up at the top of a swing and move down, top of a swing and move down, that's create liquidity. Okay, anytime it comes up, come down, comes up, come down, this is the demand liquidity. This is the demand liquidity right here, or supply. This is supply, sorry, supply. And now this also created the demand liquidity as well up here, right? So this could be bouncing like this for a little bit. It could, that is a possibility for Bitcoin to bounce around, to do this, and then shoot up, okay? Be aware of it, but the point is, we know this is a point of I right here and a POI point of I, POI point of interest. Okay. All right. Great. I hope everyone got this set up. I got mine. Brad got his. Pick a pair from a coaching standpoint. Pick a pair. Follow along. Pick a couple pairs and follow along. Pick a couple pairs and follow along. We'll go over this on Tuesday and Thursday to see how we're doing. If you're trading it on demo, take a couple of pairs that you guys like, take a great extreme setup, There's some really good extreme setups that I called out, some really good pips coming up. Month of April, it's going to be a positive month for a lot of people. Just make sure you're trading on the right side, but more importantly, stay in discipline to your trading plan and idea. Okay. Other than that, have a great Sunday and let's have a great week. Be careful with your money. Trade small, trade smart, and have a great day. Okay, guys. Talk to you later. Bye-bye.